Hello friends, welcome to Finance MCQ. I am CA Pritam Sangwan and today we will discuss buyback of shares, which is an important topic from Commerce and Accountancy subject of paper 2, which is a technical syllabus of your SEBI exam. Friends, this technical syllabus is of 100 marks in phase 1 and it has 2/3 weightage in phase 2 of your SEBI grade A exam. And friends, you can find entire technical syllabus of SEBI grade A exam chapter wise, topic wise on Finance MCQ website in MCQ question format. You can visit the website and practice entire technical syllabus there. I have put the website link in the description box below. So let's begin. Friends, first question which usually come is what is a buyback? So friends, it means purchase of own shares by the company, and when shares are bought back it will be cancelled by the company. Friends, further it will lead to decrease in share capital of the company. Why? Because shares are purchased by the company and they are cancelled. So ultimately it will reduce the existing share capital. And friends, company cannot purchase its own shares for investment purpose, not allowed. For example, Reliance Industries cannot invest in shares of Reliance Industry. So I hope with this that what is a buyback of shares is clear. Let's move further and discuss next point. So friends, now let's discuss some of the objective or advantages of buyback. So friends, first advantage is it will lead to increase in earning per share. Since total number of shares will reduce, it will lead to increase in earning per share. Next is buyback of shares will lead to increase in promoters holding because bought back shares will be cancelled. Then it will discourage hostile takeover by other firms since buyback will increase the promoter shareholding. Then friends, due to buyback, surplus cash available will be released to shareholder, which company does not need it for its business. And friends, buyback will also help to support the share price on stock exchange if company feels it less than its net worth. So friends, I hope objective or advantages of buyback share are cleared. Let's move further. Now friends, we will discuss provisions of Companies Act related to buyback of shares. As per section 62(1), a company is allowed to do buyback of shares out of free reserve, securities premium account, proceeds of fresh issue. So if a company wants to buy back, it can utilize funds from these three resources. Further friends, section 68(2) says no buyback of shares unless it is authorized by article of association. Special resolution in general meeting is passed in this regard, that is for buyback of shares. Further, please note that friends, if buyback of shares is 10% or less, that is 10% of paid up capital and free reserve, then board approval and special resolution in general meeting is sufficient and no authorization from article of association is required. So friends, do remember this point, it is very important from your exam point of view. So I hope these provisions are cleared. Now let's move to the next point. Now friends, let's also discuss some other important provisions related to buyback. Friends, there has to be minimum 1 year gap between closure of previous buyback offer and new buyback offer. So friends, a new buyback offer can be made only when 1 year or 12 months have lapsed from previous buyback closure date. Then friends, if company is decided for a buyback, they can do so, but the buyback limit is 25% or less of total paid up capital plus free reserves. And friends, maximum buyback company can make in any financial year is 25% or less. So in 1 year, maximum 25% only shares can be bought back. And friends, another buyback condition is debt equity ratio should not be double. That is, after buyback, your debt, that is both secured and unsecured debt, should not be more than twice of your capital plus free reserve. This is very important point. Do remember this point, friends. So I hope these provisions are very much clear. Now let's move to the next point. Friends, let us also discuss some more provisions related to buyback of shares. Now friends, buyback is to be closed within 12 months from date of passing of special resolution or director's approval. And friends, buyback can be made from A, existing shareholders on proportionate basis as per their shareholding, or buyback can be done through purchase of shares issued to the employees under ESOP plan, or it can be done through open market, in that open offer is made to public at large, that whoever interested can sell the shares back to the company. So I hope these two provisions are clear. They are simple one but very important from your exam point of view. Now friends, let's talk about SEBI regulations related to buyback of shares. And friends, SEBI regulations are applicable to all listed companies. Friends, SEBI says no buyback of 15% of more from open market. So it means if you're buying back shares from open market, then maximum 15% shares can be bought and not more than that. Next regulation is no buyback offer within 1 year from closure of buyback offer. This provision we have already discussed. The next regulation says at least 50% funds earmarked for buyback should be utilized for buying back shares or other specified securities. That is, if you have specifically set aside some funds for buyback, you have to use that fund for buyback only. That is at least 50% and not for any other purpose. So friends, these are some of the important regulations of SEBI regarding buyback. Friends, I have covered only important regulations and not complete regulations. Only those which I feel which will be relevant and important for your exam point of view are covered. So friends, let's move to the next point. Friends, there are so many provisions, regulations are there related to buyback. So just quickly we will summarize them for better understanding. First, we need to have 1 year gap between last buyback and current buyback offer, and we need to complete the current year buyback within 12 months from date of special resolution or director's approval. Next is we need to utilize at least 50% of funds which we have earmarked for buyback purpose. Then we have maximum limit of 25%. That is, in one financial year we can buy back only up to 25% or less of paid up capital and reserves. And from open market we can buy back maximum up to 15%, that is SEBI regulations. Then we discussed that for buyback we need special resolution and authorization from article of association, and if buyback is 10% or less, then there is no need for authorization from article of association. Board approval and special resolution will be sufficient. And last, debt equity ratio should not be more than double or twice. That is, post buyback your debt should not be more than twice of your paid up capital and free reserve. So friend, I hope with this diagram all important conditions related to buyback will be clear. So friends, in today's buyback topic we have discussed what is a buyback of shares, objectives, advantage of buyback, provisions of Companies Act 2013 and SEBI regulations related to buyback of shares. So I hope friends, with this video your concept related to buyback is clear. I have covered all the relevant points which are important from your exam point of view in your paper 2 of journal stream. Friends, for more practice of this topic in MCQ format, I request you to please visit Finance MCQ website. It has entire SEBI graded technical syllabus which is paper 2 of general stream in MCQ format. It has 2000 plus subject wise topic wise MCQ questions to practice. We have added explanations for correct answers wherever required. It also has 25 test series for your technical syllabus to practice. So friends, there is lot of study materials to practice on finance MCQ. Do visit the website for more practice and increase your selection chances. Friends, website link is in the description box below. I will come up with new video. Till then, take care and thank you so much for watching.